Welcome to week 3 of Financial Management for Nonprofit Organizations. This week we're going to look at another way to examine assets, to look at different kinds of assets. We're going to look into the IRS Form 990, and we're going to look at some ways to understand and interpret financial information. So first, let's go look at assets. Last week, we looked at one way to examine assets as current assets or fixed assets. This week, we're going to look at a way to examine assets through what's called fund accounting practices, which were instituted and standardized in 1994. And they break up assets into 3 categories based on the kinds of restrictions that have been placed on these assets. There are unrestricted assets, temporarily restricted assets, and permanently restricted assets. Now, unrestricted assets are just like it sounds. There is no requirements on how or when this asset will be used. You could receive a grant, a donor can make a contribution, and the organization can use it anytime for any purpose. That's really the best. There are temporarily restricted assets where there is an expectation from the source of this asset, a grant, a gift, etc., that it will be used for a certain purpose within a certain time. So it could be revenue that's been received. So let's say you are going to run a summer program for children and the state has given you a grant to run that. But you received this grant and recognized the money in March. It is restricted. You cannot use it until the time that it is meant, until the summer. So it is there in your books as revenue received, but it is temporarily restricted until the summer. Permanently restricted assets can only be used the way the donor designated them. You have no options. Typically, that might be a donation to an endowment, where that money must remain in perpetuity in the endowment fund. It will be generating interest that the organization can use. It may be that the organization received the gift of a building, but it can only be used for a certain purpose and cannot be changed into a different use later. The IRS Form 990. The IRS Form 990 is the form that most tax-exempt organizations must file with the IRS each year. And this form allows the IRS, as well as the public, anyone, potential donors, community members, other nonprofits, to look at the nonprofit's fiscal operations. And it also includes information on the nonprofit's mission, its programs, and accomplishments. So the 990 gives each nonprofit the opportunity to report on what it accomplished in the prior year, not just its mission, but actually what good it did, in quite specifically with numbers. And it helps make the case that for the organization should keep its tax-exempt status. The 990 also looks at the compensation of its highest paid staff and directors, exactly how much they are being compensated and how that level was determined. The 990 consists of 12 core parts. Part 1 is a summary of the other parts that you will be seeing in more detail. Part 2 is the signature block. So here is for page 1. You will see first a quick summary of what its mission is, then a summary of its revenue, a summary of expenses, and signature. Part 3 is where actual program accomplishments are discussed. In this case, we're talking about an alcohol and drug treatment program. What they do is provide methadone and Suboxone, and that they served close to 500 patients and had 25,000 encounters, meetings, phone calls, etc. Part 4 is just a checklist of all the required schedules, and schedules are the supporting documents that happen after the 12 parts to answer further information about what was already noted. And Part 5 is just a checklist to ensure that the organization has met all its filing requirements. Part 6 relates to government, management, and disclosure. Part 7 is where compensation is noted for officers, directors, key employees, etc. In this organization, we can see that the chair and vice chair of the board of directors are not compensated, whilst below that we get compensation and any other forms of compensation for all of the highest paid executive staff. Part 8 is statement of revenue, describing all sources of revenue in much greater detail. It begins with both fundraising and government grants, followed by any income the nonprofit earns, such as patient care services, membership, etc. Then it describes any investment income, which would be, say, from an endowment or a short-term investment, followed by if the organization is charging rent and rent minus expenses, and then any fundraising event income, miscellaneous income, and total revenue income. Next, we have the statement of functional expenses, as we discussed last week, that consists of program expenses, management expenses, and fundraising expenses. Now, it begins basically with expenses that a foundation or a grant-making nonprofit would incur, and grants to other organizations are listed. And then there's compensation for highest paid executives, other salaries, and all other expenses. And again, you'll see they're divided into program, management, and fundraising. Part 10 is the balance sheet, the same as a statement of position, and it includes both the beginning of the year balances and the end of the year balances. And just like a statement of position, we have assets, liabilities, and net assets. Part 11 is what's called the reconciliation of net assets, which compares the net assets at the end of the year with the net assets from the beginning of the year. And these net assets at the end of the year are calculated by adding the revenue minus expenses, the surplus or deficit in revenue, to the net assets at the beginning of the year. And that surplus or deficit added to the beginning of the year's net assets will give you the net assets at the end of the year. In this situation, we could see that at the beginning of the year, this nonprofit had a net asset deficit of almost $448,000. However, in the course of this year, it also earned a surplus of almost $346,000. So when those two were added, the end of the year net asset is only a $102,000 deficit. Not good, but certainly a lot better. The final part, part 12, is a confirmation of the review and oversight of the preparation of this 990. And I just wanted to point out it's question 1, asking what kind of accounting method was used, where the choices are cash, accrual accounting, or other, because next week we will be discussing what accrual accounting means.